Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. So far, we've had a pretty interesting week when it comes to the overall stock market. Yesterday, I talked about some social media stocks that have been falling after they decided to ban Trump from their platforms. And as a result, Twitter was down around 11% in the past 5 days, and Facebook was down around 7%. And so yesterday, I made a video talking about my opinions on if these are great buying opportunities. And if you missed that video, I'll link that above right now. Also, we've had some very interesting things with a short squeeze happening on GameStop. GameStop was a stock that I identified around 2.5 weeks ago as having the potential for a short squeeze. And because of that, the stock is up like 100% since that point. And so far in the past 6 months, I've gone quote unquote all in. In my mind, all in is having like 50% of my portfolio going in on a single play. And I've done that twice in the past year. And so far, both of them have paid off really well. The problem is I have decided to be a little safer with my positions. What I mean by safe is that I've been selling covered calls against my position to try to lower my average cost in case things don't go according to plan. And as a result, I've missed out on a lot of gains. So today I'm going to talk about this play that I've decided to take on my favorite stock of 2020 and why it's my riskiest stock trade that I've ever had. So I'm going to talk about the 3 reasons why I absolutely love this stock, and then I'm going to talk about how I decided to go about this play because it is not the simplest thing I've ever done in the world. Just a reminder, there are timestamps in the description below if you'd like to bounce around, or if this is a stock you've already heard me explain because it is one of my favorites, you can just skip to the end where I kind of explain how I'm doing this trade. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. You guys have been killing it with the support recently, and I really appreciate all that. So if you've been around this channel for a decent amount of time, it's not going to be a real surprise what my favorite stock for 2021 is. It's going to be General Electric, ticker symbol GE. And while this is not the sexiest stock like a Tesla or a NIO, there are 3 main reasons why I'm very bullish on the stock and why I think it's going to be the top performing stock in my portfolio in 2021. And so I'm going to compare this as my clickbaity title of every time I'm doing research for these stock videos, I always see stuff, it's like, the Motley Fool gives its rare triple buy alert. And so for my triple buy alert, it has 3 main reasons why I think this is a fantastic play for 2021 for my portfolio and based off my risk tolerance. And so the first reason why I absolutely love GE has to do with a video that I made earlier this week when I bought it on my birthday, is the fact that it's a renewable energy stock. At this point, I think 2021 is going to be the year of renewable energy stocks because we're seeing a change of the guard when it comes to the change in administration. And with the new administration coming in next week, and specifically today, I'm recording this at around 10 o'clock in the morning. It hasn't happened yet, but Biden is expected to announce his economic plan, which is mainly going to be focusing around the vaccine rollout and just dealing with the overall virus. So I'm not expecting the renewable initiatives to be announced right now, but I'm expecting that since we are getting into the new administration, we're going to be seeing a lot of money, specifically because it is a Democratic president, House, and Senate. I think we're going to have a lot of money spent on green energy going forward. Since GE is already involved in a lot of renewable energy programs, we have the providing wind turbines to the largest wind bank in the UK. They have a deal with Lithuania to provide wind turbines, and they started the first turbine recycling program in the US or maybe even in the world. And with the new administration coming in, I'm expecting GE to get a lot of money when it comes to overall contracts, and I'm expecting that to boost the stock price up significantly. From this data back in 2015, almost 50% of all wind turbines installed were made by GE. So this is me picking a leader in a sector that I think is going to see explosive growth in the next couple years. We've seen some incredible growth of the wind industry already. Back in 2000, there was only 2.5 gigawatts installed. Going to 2020, there was 113 gigawatts. 224 is expected by 2030, and 404 gigawatts is expected by 2050. And since GE has been the leader in providing these wind turbines, this gives a lot of growth potential to the company going forward. GE also provides hydro turbines that provides 25% of the world's capacity when it comes to hydroelectric power. And so this is the number 1 reason why I'm putting GE as my favorite stock for 2021, because I think the changing of the guards and the Biden administration coming in, I think there's going to be a lot of excitement behind investing in renewable energy stocks. And since GE is one of the leaders when it comes to mainly turbines and also kind of the hydroelectric stuff, I think GE is going to get a lot of momentum whenever Biden does announce how much money he's going to be putting into these projects. So that's going to be one of the main catalysts that I'm looking at going forward. And that's the reason why I decided to take my position this morning before Biden does announce his economic plan. I don't expect him to announce anything about renewable energy this morning, but I'm expecting within maybe the next 6 weeks that we're going to hear something, and that might be a catalyst that pushes the stock up. The number 2 reason why I really like GE is that I think it's a great recovery play. If you've been on this channel since the last summer, you know that my strategy for investing for the past couple months has been buying into the reopening stocks. These are stocks that got beaten down early on in 2020 with the pandemic, but as we've been having this positive news with the vaccine rollout, they have been increasing in price for a while. But if you look around the overall stock market, most of the companies are in the green for the last 12 months. What this means is that there's not a lot of great deals out there. And I do think that GE, while it has recovered significantly, it's up 112% since its bottom back in May. But I think the biggest part of their business, which is aviation, still hasn't recovered fully. So I think when that happens, that's going to be a huge bounce back to the company. I think the earnings report is going to shoot it up significantly when that happens. The main reason behind aviation is that obviously with the pandemic, the demand for air travel has not been there. As a result, a lot of these airlines are not buying these planes, which many of the planes, especially considering that GE has a lot of deals with Boeing, they provide a lot of the engines on that. And so they saw a 44% drop in sales for the aviation business, which is a huge drop. But we haven't seen that recovery yet, so I'm still waiting to see that come back, and I think that'll be a huge catalyst that pushes the stock up. And then my thought process is Biden comes in, he's taking the virus more seriously, and he's going to likely emphasize the vaccine distribution. As a result, I think that that'll mean that air traffic is going to get back to normal quicker than if we still had a Trump administration. And so that makes me feel pretty optimistic about air travel. And with these 737 MAX planes being allowed to fly again, this is going to be a huge boost, considering that GE does provide the engines for those planes, and that's going to be a huge boost to their numbers. In addition, 26% of all planes have been grounded right now, meaning that GE's service numbers have fallen by 55%. So aviation is the most important part when it comes to GE's business, and it's also the most profitable. And since it has not come back to the pre-pandemic levels, I think this will be a huge boost once we start seeing those numbers going in the right direction. And so that's the number 2 reason why I think that GE is a great play, because I think the recovery play still hasn't been seen yet, as the aviation industry has still been hurting. Number 3, the stock is super cheap compared to its historical range. As I mentioned, the stock is up more than 100% since it hit its lows back in May. But looking at the 5-year chart, the stock is still down more than 50%. So this has been a stock that has been beaten down for a while. And this has been one of my examples of buying stocks that have been beaten down but are on the road to recovery. I love buying these beaten down stocks that people don't really have as much faith in anymore because the expectations are so low. Add that together with the pandemic where air travel is at historical lows, you get a stock that I think is going to get boosted up significantly with any positive news. So that's kind of what I'm waiting about. And so this stock has been hurt pretty bad since the financial crisis of the late 2000s, and they've had to restructure a lot of their business, which I think is a very positive thing. You always get this thing where as companies try to slim down, it results in higher profits. And so we've been seeing a lot of struggles. Some of the problems includes cutting their dividend down to 1 cent and then eventually cutting it. And so that gets rid of a lot of the value to some investors that are mainly investing based off the dividend. But for someone like myself, I'm looking for the long-term growth potential of the renewable energy stocks, and that's why I'm very optimistic. So you put all 3 of these reasons together, and that's why I've decided to take my riskiest position ever. And so this is risky for me. And the reason I'm talking about it being risky is that I did buy an option for the first time. Based off the risk, there is a chance that I lose all of my money. But I want to talk about my thought process of deciding how I wanted to take this position, because I am long in GE already. I have multiple positions. I have just straight up shares, and I've been selling puts, which have been bringing in around 50 cents per share for around 2 weeks of exposure. And so what this does is I'm pretty much involved with GE no matter which direction it goes. The stock goes up, I have shares that are going to benefit from that, and my puts are going to expire worthless. If the stock goes down, I'm going to be pocketing the profit and being able to buy 100 shares of that stock. And as I mentioned, my 2 largest plays that I've had in the past year have to do with Sonos and GameStop, which recently happened. And the problem behind it is that I made 15% profit off of Sonos, but I sold a covered call, which limited my upside potential. And so as a result, I made 15%, but it's up 100% since that point. So I've missed out on a lot of money because of that. I am still very happy. I was up more than 60% in 2020, but I feel like I missed out on some stocks that I felt very positively about. And so that's kind of the risk of using the wheel strategy that I use as my option strategy, where you sell a put, if you get assigned, you sell a covered call. And you kind of are limiting your max profit, but you're bringing in reliable income, and I absolutely love that. And so I decided to go with a LEAP strategy, LEAP. And I was very surprised to hear that LEAP is actually an acronym. It stands for Long-Term Equity Anticipation Securities. Basically, the idea of buying at LEAP is that you're buying an option that is very far away with the expiration date. And so the option that I decided to buy is for January of 2022, so it has more than 365 days until expiration. For people that haven't been involved as much with options, the way that the premium is determined it's very complicated, but the main things that I look at is how far away from expiration determines how expensive it's going to be. So the further away you go, usually the option price goes up. The closer to the current price for the strike price, the price is going to go up. and then how volatile the stock is, which is determined by the IV, is also going to determine that. So when I go out and I bought a $15 call for January of 2022, I had to pay around $100. And the way that I kind of justified buying this is the 2 puts that I've sold on GE so far this year have made me $110. So it's kind of like, in my opinion, I have the money to pay for it, the $100, but I'm using the wheel strategy to pay for it. And so this is going to really benefit me if the stock price goes up like I kind of expect it to. I talked about the huge catalyst that I'm kind of expecting to see for GE going forward. And if I'm using the wheel strategy, the problem is I'm going to be selling covered calls, which limit my upside. But since I have this very long-term call, it's going to allow me to benefit if the stock price increases significantly. So based off the $1 that I had to pay, my break-even point will be $16 if it gets there in the next year. And I think that's very possible. And the way that I'm going to limit my risk and make sure that I don't lose all of the money that I put into this call is that if we get to July and GE hasn't been really moving the way I kind of expected it to, or we haven't had the news or the catalyst based off of the recovery or the renewable energy initiatives, I'm going to be doing something called rolling the option. So I bought this call, so then you sell back the call. And what that does is it brings back some of the money that still has value with the option, and then I'm going to be rolling it into paying for a longer expiration call. So likely what I'll do if I get to July and things aren't going the way I'm going to do, I'm going to sell that $15 call that I bought this morning, and then I'm going to be buying maybe like a 2023 call to see what happens. And so this is a way that makes sure that I don't lose 100% of my initial investment, but allows me to kind of wait out to see what's going to happen with this company. So as of right now, this is the riskiest trade I've ever made, considering it does have the potential of losing 100% of my initial investment. But the way I'm trying to limit that is by rolling over the option if we get to July and things have not been going the way that I expect them to. GE is now officially my largest position, considering that I have one call, I've been selling a put, and I have naked shares. So this is a stock that I 100% believe in at this point. I think it's going to be the best stock of 2021. That's why I've decided to put my money where my mouth is and decided to have my riskiest trade and finally buy an option for the first time ever. So for a lot of people, this is not super risky of a trade. People have been investing heavily into stuff like Tesla, NIO, but that's just not something I'm here for. My whole kind of idea of investing is I want to be relatively safe, but I want to be outperforming the market by a significant margin. I was able to do that in 2020 by making 60%, and I think having this call gives me the opportunity to profit significantly if I am right. This will be the 3rd time in a row if I get this correct, with Sonos and GameStop being my previous 2 kind of like all-ins. And so I'm trying to limit my risk by being able to roll it, but I think it gives me a lot of upside potential. So I know a lot of people don't feel as strongly about General Electric, ticker symbol GE, but it's something that I'm pretty much wholeheartedly behind at this point. I think renewable energy stocks are going to be maybe not the top sector of 2021, but I think there's going to be a lot of excitement behind them, and that's why I decided to put my money where my mouth was. So let me know what you thought of my analysis and what you thought about me finally buying an option for the first time. Let me know if you've ever bought an option in the comment section down below. Thanks for watching. I will see you in the next video.